You guys have all seen images like this one as it pertains to trading indicators. They showcase where an indicator is giving a sell signal, where an indicator is giving a buy signal. Well, the goal of this new series I am starting is to really put these signals to the test. Put these ideas and these strategies to the test. We're going to be utilizing code to back test every example where these common indicators tell you you should be buying or selling a stock across multiple different time frames, across multiple different tickers. We're going to find out what strategies really work, what indicators really work, and we're also going to be looking at the best way to use certain indicators. Welcome to the Indicator Trials. The first indicator we are going to be testing during this new series is the Relative Strength Index, the RSI, an extremely popular indicator that shows you the relative strength index of a chart. It's got an oversold condition, which is below 30. It's when the line turns blue here. And it's got an overbought condition, which out of the box is overvalue 70. Now, the common indication of this strategy is that when it's below 30, it's oversold. That's a buy signal. When it's above 70, that's overbought. That's a sell signal. And that's what we are going to be putting to the test via our code, back testing every single example of this happening across multiple time frames to see whether or not the strategy works. Now, if you've been trading for longer than probably 3 months, you're going to say, well, Trey, look, I understand that I'm not supposed to just use an indicator, one indicator to buy and sell. An indicator can be used or should be used as part of a larger trade plan. And yes, obviously, I agree with that, but it's important, it's scientific to break it down and to look at the individual variables of a trade plan to find out the best way to utilize them, right? So looking at one indicator at a time like this, while not how you're supposed to trade, you're not supposed to just go, oh, I'm going to buy here and sell here. It's supposed to be part of a trade plan. It's still good to know if it works, if buying here, selling here is profitable over time. If it's not, then it's probably not what you should be doing in your trade plan anyway. So it's important to break it down and to look at it individually. And as this series carries on, we may start doing, a couple of indicators together to see how they kind of counteract together and start really building trade plans as long as this series is going well. So hit the like button if you enjoy it. It'll continue on. But for now, let's go ahead and jump into the code in which I am going to be buying anytime the print is under 30. So buying anytime the RSI, the relative strength indicator, shows that it is oversold, and selling those shares when it gets to overbought. Really, this condition right here, right, where this one looks really good, and this is what a lot of people will do, right? A lot of people will look at when the markets are strong, they'll come in and they'll look at indicators and they'll go, oh, if I bought here and sell here, look at how much money I would have made. Well, let's put it to the test. Let's use it in the code and let's see how profitable it really is. All right, so from that screen we were just on, you can now see that the strategy, the back test is working, is trading. It bought as soon as the RSI got under 30, bought the close of the bar. As soon as the RSI got over 70, sold the close of the bar. If I go ahead and zoom out, we are looking on a 2-minute chart right now. We will flip through different time frames, as I've mentioned a couple of times, and see how it is doing. But let's go ahead now and put on the floating P&L study here in Think or Swim, which will show us how this strategy has performed on SPY, on the S&P tracking ETF, on a 2-minute chart over the last 30 days. It is not profitable. Buying oversold, selling overbought, not a profitable strategy over time. And once again, utilizing this code, we get to see every single time in the last 30 days this has happened. We're not just cherry picking a couple of times and going, oh boy, look at how good the indicator is. That's the whole point of this series, is to really, really show you how the indicators work and what the best way to use them is. And maybe buying when it's overbought and selling when it's oversold is not the best way to use the RSI indicator. So we can see here, it just didn't work. There's too many times where it loses too much money. Quite obviously, it doesn't always lose. Of course, there's trades it does work, but we don't And we can't just cherry pick those trades and go, oh boy, this looks like it's going to work. You have to look at every single time it happens across the time frame. Let's go to a little bit of a larger time frame so we can see more days. Let's go to 180 days on a 5-minute chart. And as you can see, it's even more red now. The last 180 days, if you traded 100 shares at a time, you'd be down $5,900 using this strategy on SPY. Now, I bet if we go to the daily, it's going to be green. It is green. The SPY daily, and really the market daily in general, is a tough one to utilize and to look at because obviously the markets have been extremely bullish. So most indicators, if you just bought SPY flipping anywhere in the last 12 years, you're probably up money, right? The indicators aren't a great example, I don't think. The best way to do it is, how would it perform against buy and hold, right? Well, if you bought 100 shares at 243, you would be up, what, 16 grand at 408? Did I just do that math right? 100 times 160 is 16 grand, right? So you would be doing way, way better if you just bought and hold, therefore showcasing that maybe even on the daily, this isn't a great strategy. If it doesn't compare to the buy and hold strategy, then maybe it's not even such a great strategy on the daily chart. So those are going to be kind of the ones we flip through. Now let's look through a couple of other tickers. I don't want to just show you SPY and just say that. We're on the 5-minute, 180-day, and I'm just going to flip through some tickers now. Microsoft didn't work. Apple doesn't work. Tesla really doesn't. Wow, down 61 grand on Tesla. Obviously, it's a more expensive stock, but really doesn't work on Tesla. Micron doesn't work. And yeah, we could just continue doing this over and over again if you guys wanted to, but it looks like it's just not working very well. Target doesn't work. Buying when the RSI is oversold, selling when it gets to overbought, not a profitable strategy. Once again, I understand that we'll trade. That's not the point of RSI. The point of RSI isn't to be used solely as a trade indicator. But please, this is still a good showcase that maybe it's not even a good place to be buying. Maybe you shouldn't just be buying when the RSI is under 30. It's quite obviously not profitable over time to be buying there. So, even in your trade plans, it's important to understand how individual indicators within your trade plan break down. Now, I want to come into the code. I'm going to do something fun here. So you can see, obviously, we are set to buy when the RSI breaks under 30, sell when it breaks over 70. That's it. It's obviously a really simple code. Keep your code simple to test simple things like this. I want to flip it. I want to buy now when the RSI is overbought, and I want to sell when it's oversold. This goes against all common principles of the RSI indicator. This picture that I showed you guys at the beginning, the extremely common principle that is taught all over the internet, I mean everywhere, all over. There's thousands of videos on the RSI indicator that tell you should buy when it's below this and sell when it's overbought, over 70. And as you guys just saw from my code, doesn't work. I'm going to flip it now and look at what happens when I flip the code. Now it is buying a strong RSI. It is buying when the relative strength index gets over 70, and it's selling only when the RSI gets weak. And look, all of a sudden you're green. It's working now. Now, I'm not going to say this is in no way a profitable edge on the market. I'm not, in no kind of way am I saying you should go trade exactly like this just because it's green here. But it's working way better than it was when you bought lows and tried to sell highs. Buying the high, buying when the relative strength index is up, and then selling when it gets low looks to be the better way to utilize the indicator. According to this code, according to this back test, buying relative strength index high seems to give you better continuation, that the better continuation that the relative strength index is going to stay up. The markets are going to keep going higher. The ticker that you're trading, the instrument that you're trading is going to keep going higher. This is once again the 5-minute 180-day. Let's look at the 2-minute 30-day. Still green. Once again, not a profitable edge on the market. I would not go just trade this for the love of everything you believe in. Please do not just go trade this. But it's a great way to start to look at how the indicator works and what's the best way to use the indicator. And I just find it so funny that I mean, I promise you, you can look up RSI indication videos or learning lessons after this. They will all tell you buy signal, sell signal. But when you flip it, it starts to work better. And I just find that very, very funny. Let's go back to the 180-day 5 minutes. Let's flip through some of the same stocks. Microsoft, still red on Microsoft, but not as red as it was. Tesla, it was down like 40 grand or like something. It was down a bunch on Tesla the other way. Now it's up 60 grand in the last 180 days trading Tesla this way. Look at how the RSI indicator flipping it, buying when it's overbought and selling when it's oversold, flips that P&L on Tesla is an insane one. Apple now works. Apple was red the first time around. Target's another one we looked at the last time. Still down, not down as much though. Once again, not meant to be a trade indicator, but still outperforming. All of those ones we just looked at were outperforming when you were buying the oversold and selling the overbought. So that is an extremely fun find on this first episode of the indicator trials. An extremely fun find that perhaps flipping the basic ideology that every beginner trader gets taught about the RSI indicator might be the better way to go about it. And buy for, once again, buy whatever deity you believe in. This is not saying, oh, Trey told me I'm supposed to buy here now. Like, no. Please indicate this into your own testing. Start to maybe mix this into some of your own back testing in the future, into your own trade plans. But it's still an awesome way to look at, holy crap, maybe I've been using this indicator wrong the whole time. Maybe the RSI being up. I mean, look at when it crossed here. Yes, it didn't buy because it was already in a trade. But look, it crosses above the 70 here, just keeps pushing. I don't know. But the code isn't wrong. That's why we do this. That's why we do it with code. We don't cherry pick specific trades. We look at every single time it has happened over this time frame, and it's a wild finding. I really, really think it's a wild finding that buying when the RSI is over 70, selling when it's below 30 is better than buying when it's below 30 and selling when it's over 70. So on that bombshell, I think it's time to wrap up the first episode in this new series, the Indicator Trials. If you've ever liked a video of mine before, please like this one. Well, I guess if you actually liked the video, I want to know if you guys like this idea and want me to continue on with it. Once again, I understand that one indicator isn't a trade plan. That's not the point of this. The point of this is to test the individual variable. And as we get further into this series, we'll start mixing. Well, what if we mix RSI here and MACD here, stochastic here? We'll start to maybe look at more specific multi-indicator trade plans. But you got to build that base first of understanding the best way to use each and every each and every indicator. So that's what we're doing now. So hit the like button if you enjoy the video, if you're looking forward to this series. Hit the red subscribe button if you want more of this in your subscription box. And with that being said, I'm going to go ahead and sign out of this video. I will catch you all in the next one.